If you are doing lender appraisal work, whether it be direct lending or through an AMC, some kind of a third party, if you are doing an appraisal for mortgage purposes, you are not just in the valuation world. You are also in the risk management world.
Originating from deep inside the Rocky Mountains, transported through the power of the internet, and arriving inside your tiny earbuds. It's the Appraiser Coach Podcast, helping appraisers increase their efficiency, quality, and make more money. Here's the guy who makes it his life's mission to create value for real estate appraisers nationwide. Your host and the Appraiser Coach, Dustin Harris.
All right, folks, welcome to the program. Dustin Harris, your humble host of the Appraiser Coach Podcast. Welcome. We are sponsored today, of course, by Alamode. Alamode is the software that I use on a daily basis to do my appraisal work. There's a reason. Check them out, alamode.com. And OREP is the E&O that I use on a daily basis. They cover my backside. They cover my six. OREP.org. That's OREP.org. Right here on this program, recently, I shared with you some data. And the data came from Fannie and Freddie, respectively, and was put together with some statistics, or were statistics that were put together by the AEI Housing Center. You can look them up online. I won't go through their think tank, okay? You'll recognize probably some of the names of the individuals that head up that think tank, but they put together the GSE appraisal waiver data. You can find it online. As of this recording, the most recent data comes from February 2024. The focus of the last program was on the number of appraisal waivers used, okay? And I compared this to some of the promises that were made by Fannie Mae. I was in the room when Fannie Mae first started announcing that they were going to ramp up the waivers, and this was in Las Vegas at one of the conferences, and they promised us. I use that word because they used that word. They promised us that they would never ramp it up more than 10%. Well, that promise was. I honestly think maybe I'm just remembering this incorrectly, but I swear people booed in that room when that happened. I don't think people believed them. Okay, so we focused on the number of appraisal waivers. Go back and listen to the episode previous on appraisal waivers, and you can get all that data. Today, I want to focus on a different aspect of that, and specifically, I want to focus on the number of defaults when it comes to these loans that the loan origination company, the mortgage company, the banks, the lenders choose to use versus Fannie Mae, of course, and Freddie Mac accepting that. Keeping in mind that the waiver comes with a couple of different options, or a couple of different requirements is a better word. Comes with a couple of different requirements. In other words, you can't get a waiver unless and until you meet certain criteria, one of those being credit score, one of them being a fairly recent appraisal, and there's some other items in there as well. I want to focus a little bit on the credit score. I don't remember, it's not even important. Just know that you need to have a better credit score if you want to get a waiver than not, okay? The chances of getting a waiver, skipping the appraisal process, are going to be better for you as a borrower. Right now, I say better for you. I could do a whole podcast and have on, is it truly better for you to not get an appraisal, right? I mean, the obvious answer is the obvious answer on that one. But let's say that your only goal is to save money in the, at least in the closing side of things. Does it save you money in the long run? Again, topic for another day. We're not going to focus on that today. But let's say as a borrower, you're trying to save money, so therefore you're hoping and praying, begging that you get that appraisal waiver, okay? The question on the table is the chances of default, right, with regard to an appraisal, a full appraisal through that loan process versus a waiver, okay? And what does that mean for the loan industry? Okay, so let's back up for just a second and set the stage. What is, and I know this is getting back to basics, right? The foundational pillars of what we do as appraisers, right? We, believe it or not, folks, are not in the valuation business if we are doing lender appraisal work. Let me repeat that. If you are doing lender appraisal work, whether it be direct lending or through an AMC, some kind of a third party, if you are doing an appraisal for mortgage purposes, you are not just in the valuation world. You are also in the risk management world. Okay, think about that for just a second. Okay, what does that mean? Well, you've got to remember why it is that these banks and specifically Fannie Mae requirements are pushing toward valuation, right? That is one of the components. There are several things that need to be put together when you put this loan together, and they are all about risk management, right? When I say risk management, not yours, but theirs. They're trying to manage the risk of a default, meaning they put money out there, they loan that money, they use a mortgage, a property to secure that mortgage. They don't want that default. Now, there's some economists would say, absolutely, they do want that. And we're not going to go there, right? I understand the argument there, okay? That there's possibly more money to be made in defaults than not. But again, that's not the purpose of today's program. Just let's use the conventional wisdom here today and say that Fannie Mae does not want a default on these loans, right? They want to fund these loans and they want the borrower to continue to pay interest to them over the life of the loan, and that they will make more on the interest than they ever did loaning the money out to begin with. Okay, that's economy 101. That's loans 101, right? That's mortgages 101. Well, part of that process, of course, is risk management, meaning if they want to continue to fund that loan and receive interest payments over the life of the loan, they don't want a default. They don't want that borrower to go into foreclosure. They don't want that borrower to not be able to make their payments. Okay, can we all establish that that's the premise today? Okay, we're going to talk about default. We're going to talk about risk management. Okay, so as a consequence, right, and to speed this process through, right, that's the other thing they're dealing with is competition, right? If they're not Rocket Mortgage, meaning they're super fast, right, they're going to see their customers go other places because we're all in a hurry, right? We're in a TikTok society where if it's not 30 seconds or less, we're going to move on to the next reel. That's the kind of society and mindset that we live in. And appraisers are sometimes seen, and I've heard this term used. It's not my term. I'm just repeating what I've heard, folks. I don't agree with it. I'm just repeating we need to know our place in the world. I have heard us referred to as the speed bumps of the process. Now, part of me wants to say, well, good. There needs to be a bit of a slowdown. I mean, we're dealing with a huge loan here. We're dealing with a huge process here. We're dealing with we're dealing with something that is absolutely essential that we dot our I's, we cross our T's, that we do the things that we need to do in order to keep things moving in the proper way, not just in the fast way, if that makes sense. I hope that makes sense. Okay. So let's agree that default is bad. Now let's look at this in the terms of waivers. Okay. Let's look at this in the terms of appraisals, full appraisals versus waivers. If the goal is to not default on the loan, you would think, at least from the appraiser's perspective, we'll get the damn appraisal, because that's going to be better all day long than a waiver. If you're trying to truly decide what the value is of that property, why in the world would you ever get a waiver? Okay, are you ready for the surprise? This might surprise you, folks, because the conventional wisdom is that an appraisal is better, that an appraisal is going to cause less default on loans than something else. Surprise, it's not true. If you look at the pure data, and I'm looking at the pure data in front of me, this is directly from Fannie Mae and Freddie Mac. And again, you can go to the AEI.org website and you can pull up the most recent report. Again, I'm working off the February 2024 report. And there may be, by the time this comes out, there may be a newer one. Okay. I'm not going to break, it's hard to break down numbers on audio. Okay. So I would just encourage you to go here, but let me just cut to the chase. Let me just burst your bubble a little bit. Overall, defaults on loans are higher with those that get an appraisal. Okay, I'm going to state that a different way so it sinks in. We think that an appraisal waiver would cause more risk in default because, hey, they don't have an appraisal. Do they truly know what the value is? And I get that mindset, but the exact opposite is true. When an appraisal, or excuse me, when a loan employs a waiver over an appraisal, the chance of default is lower. The chance of default on the loan is lower with an appraisal waiver over a full appraisal. Now, before you freak out, okay, let me break this down a little bit and just give you a little bit of insight. But first, I want to pause and remind you that we are sponsored by some great companies. Of course, a la mode being one of them. I've used a la mode for many, many years. And there's a reason I use a la mode, folks. And the reason I use a la mode is because, well, it's awesome. Because it is the #1 appraisal writing software out there. And it's not just because they're big that you should use them, folks. They are big because of the tools that they bring to the table that are awesome and incredible, including the mobile app, the best out there, folks. Almost the only one out there, but definitely the best one out there. Alamode.com or 800-ALAMODE. Speaking of risk management, folks, are you managing your risk by having someone that watches your back? I have that company, I have that organization, and they are called OREP Insurance. OREP has my back because they are a broker. They're going to find the best coverage for the least amount of money every single time I renew. I don't have to do that by myself. I don't have to go out and do all of this searching. Okay, I can have someone else do that for me. I love that about OREP Insurance. Check them out by going to orep.org. That's OREP.org. All right, folks, welcome back to the program. We're talking about some data. It's displayed in full color on AEI.org, and it is the breakdown of the, risk characteristics of the GSE appraisal waivers. The conventional wisdom, folks, would be that if you get an appraisal, that the chances of default are going to go down, right? That's the reason that we are involved in the risk management side of things. As an appraiser, we provide valuation to the loan process, which allows, hopefully, the loan officer and those that underwrite that loan to make good decisions. By good decisions, meaning they want to risk less. They don't want these loans to default. But even though the conventional wisdom would say an appraisal would lower your risk of getting a waiver, when I say your, I mean Freddie and Fannie, that risk would be lowered if you get an appraisal. The exact opposite is true. Now, I will tell you this, the numbers are not huge, okay? I'll give you an example. I'm looking at two numbers. It doesn't matter which category we're talking about, okay? But we're talking about 1.6% default with an appraisal versus 1.5% default with a waiver, okay? I mean, minuscule differences, but they are different. And in almost every case, in fact, let me just make sure. Yes. Every single number here, folks, shows that an appraisal will default more than a waiver. I mean, let that sink in for a second. Now, before you freak out, let me put this in context just a little bit, okay? I don't think the numbers tell the whole story, okay? And here's why. It is not an apples to apples comparison. We're not talking about the same type of loan and the same type of borrower in every case, right? If this were to be shocking, like it kind of is when you hear it, right? Everything would have to be remain the same except the appraisal versus the waiver. And that's just not the case. What do I mean by that? Well, what I'm talking about, folks, is if we talk about the 1.6% default for an appraisal versus a 1.5% default for waiver, for that to be shocking, right, you would have to say that everything else is in line, meaning it's the same type of home, it's the same type of borrower, it's the same credit score, it's the same background, it's the same ability to repay. All of this stuff is concentrated in this decision, right? And the very decision of whether or not they can accept the waiver means that typically you're going to have a better chance of no default. Let me say that in a little different way. In order to get a waiver, folks, you've got to have a better credit score. You've got to have a better ability to repay, right? You're not going to get that waiver unless those cards are in your favor. So don't freak out, folks, and say, oh my gosh, our appraisal profession is going to the dogs. If people look at these numbers, they're going to think that appraisals are not valuable anymore. That is not the case. We're talking about an apples to oranges comparison because we're talking about two different types of borrowers. We're talking about two different risk levels here. And yes, the chances of default are less with a waiver, not because it's a waiver versus an appraisal, but because in the beginning to get the waiver, you had to be at a better chance of repaying that loan. Okay, so settle down, everybody. It's okay. It's all right. You can look at these numbers. You can say, oh my gosh, do we even have a future? But let's step back. We are analysts after all, appraisers. Okay, we're analysts after all. We don't just look at the raw numbers and go, holy smokes, look what this says. Hopefully we step back and say, no, let's actually analyze the data for what it is. And the data shows, yes, there are higher, very slightly higher chances of default with an appraisal versus an appraisal waiver, but that's not why. Why is because you're at a higher risk to begin with. This is why we get an appraisal. It's one more check and balance on that loan process. Thank you for joining me today, folks. By the way, again, if you want to get this chart and look at it yourself and actually break down the numbers and check my facts, okay, make sure that I'm saying it right, aei.org. Thank you for joining me today, folks, and go create some value.
You've been listening to the Appraiser Coach podcast with Dustin Harris. If you like what you hear, please give us a 5-star rating and post a short review on iTunes. For more in-depth insider information on how you can make more money as a real estate appraiser, visit theappraisercoach.com and sign up for the All-Star team today. Thanks for joining us. And now, get out there and create some value.